Hey, good morning, everybody, and welcome to another Daily Market Report brought to you by Mike Bjork. And happy Friday, TGIF, for everybody, and September 30th. Heading into the fall class, like October coming up, and congratulations to St. Louis and Tampa Bay for wild cards. What a wild turnaround spin, set some records from being behind in half for St. Louis for making that position, and 9 for Tampa Bay. So congratulations to those baseball teams and their fans. So I look forward to seeing some good, well, good games coming up here, playoff games here. So let's jump right into this. We got actually a lot of economic news releases scheduled for today, so we're going to jump right into it and begin with personal income. Um, Personal income was for what was it, August, and it was actually pretty low, 0.1%. We expected to drop down to zero, and boom, a negative number. So personal income actually decreased, unfortunately. So that's not a good sign. People need to get paid so they can spend. Consumer spending, we had a zero point 0.7. We did expect to drop. Again, it did drop down to 0.2%. Slightly better than expectations, but still, we need people spending money, and obviously they're not because they're making less money. Core PCE, this is the favorite gauge for inflation for the Fed. This is basically the core is where you strip out food and energy, which makes it a little bit more volatile. They're at 0.2% the previous month, and I figured it would remain the same. And I actually got very team inflation news. So this is pretty good news that inflation's still in check. We're not having an issue as of yet for any inflation. And then we got Chicago PMI. This is manufacturing in the Chicago region. It was at 56.5% and came up, actually went up a little bit. So that's actually relatively good news, but still far from where we need to be at. I mean, if you want to look at any optimism there, that's it right there. We've been seeing a lot of bad numbers from the East Coast. Chicago has had some too, even though 60 is nothing to be happy about, but it is better than being stuck down 56.5. Consumer sentiment, 57.8. Should remain a slight dip, but it went up a little bit. So again, a little bit better, but still far from off where we need to be. They are concerning because, as we've said before, these are extremely low levels. Consumer sentiment as actually is the lowest we've had from even when September 11th, 9/11 happened. This is even worse than that time period. So the feeling of the people, the mood of the people out there. So this is not, unfortunately, great news on that case. So let's go ahead and take a look at the headliners here. Stock market's down. Manufacturing had slowed down for a third straight month in China. They're one of our biggest trade partners, so that's they've been trying to slow the economy down because they are facing inflation problems, but not good for us. German policymaker kind of threw some cold water on optimism for investors. Basically, Germany agreed upon throwing out about was it 211 billion euros to the EFSF fund, and basically, I think people are kind of thinking maybe might throw in some more. And basically, he said they won't be providing any more than what was agreed upon yesterday. That's pretty much at their limit, as he was indicating. So of course, that's probably what really hit the stock market a little bit more than some of the domestic news today. But I think that probably put the put it in there. So, oops, and of course, never ending default, but that's passed. So let's go ahead and take a look at the bond market here and see what they're doing with the interest rates. As we've seen, we had a drop in the bond market, as you see the line trending downwards, and then a few days ago we've had some improvement. So now it looks like we're starting another trend here upwards here. So the good news is that we started the day up about 21 basis points, and we get the star effect, so where it would start going negative and go positive. And but right now, interest rates are much better than what we had over the last couple of days. So we're actually getting pretty good levels here. So if you're out there buying or refinancing, lock in now. We don't know if it's going to prove any more, but could easily drop the other direction. We still haven't, as I mentioned before, we still haven't closed this gap as of yet. So I would expect some type of a larger correction to happen and to close this gap here. So All right, folks, and also please stop by my mikesdailymarketreport.com and subscribe, and that we can get the updates on a daily basis emailed directly to you as I post them. You guys have a great day and wonderful weekend.